Have you ever thought that even if your monthly salary is just 15,000 rupees, you could build a wealth of crores based on this salary? I'm sure you must have thought about it, but whenever we talk about such a low salary, we know that 15,000 is barely enough to run a household. By investing this, how on earth can anyone build crores? Well, you were wrong. Today, all your illusions are going to shatter, because in today's video, we will see how a middle-class person can build a wealth of crores by investing even with a salary of just 15,000. Along with that, I will also tell you about 3 different options that will help you understand which choice is the best for you. In this video, through all the necessary calculations and examples, we will see how you can dream of becoming financially free in today's times, even with 15,000 to 20,000. So, let's assume you have just finished your education and entered a normal corporate world. And since you have just started out, your basic salary is around 15,000 rupees. Now, you want to start saving or investing a little bit out of this 15,000 salary. But before explaining the investment options, I want to give you an important piece of advice. Look, it's not like you can never become rich with a salary of 15,000. But the thing is, this is a practical world. And to survive in this world, you have to grow your earnings or your income. That's why I would suggest that as soon as you get a job or have a source of income, keep at least 2,000 rupees aside from it. Use that 2,000 to learn new skills. Work on yourself for 3 to 4 months, and along with your main job income, start earning some extra cash as well. And in today's times, the best thing is that you don't even need to leave your house to learn something new. You can take courses in your extra time, learn short-term skills, and work for someone. For example, freelancing. If you want to learn a skill related to content writing or video editing, you can take a short 2 to 3 month course, create projects, and build a portfolio. Then, you can work for 2 to 3 extra hours after office and earn some extra money. So if you want to build a decent amount of wealth, give yourself at least 3 months and build an extra income source along with your salary income. Focus on turning 15,000 into 20,000 or 25,000. Look, it's not like I am not going to tell you investment options for 15,000. I definitely will. But I am not one of those people who will teach you how to invest out of 15,000, only for you to realize at the end of the month that you have nothing left and have to borrow money just to run your house. So let's first look at what you need to do to invest a 15,000 salary. The 50-30-20 rule. This rule says that you need to keep 50% of your total income. Let's assume your salary is 15,000, so 7,500 rupees for your basic needs like rent, water, and electricity. Then, the next 30%, meaning 4,500 rupees, should be used for your wants. This will include going out, eating, hobbies, and desires. And 20%, meaning 3,000 rupees, you should quietly put toward investments. Now, if you are going to invest, where should you do it? To know where to invest, you first need to understand what options are available to you. If you take my personal advice, you shouldn't look anywhere else other than these 5 investment options in your early career. As you can see, there is the FD, fixed deposit, which gives returns of up to 6%. After that comes gold. On average, you get around a 10% return on it. Then comes our stock market. If we take the Nifty 50, we get a 13.5% return there. Companies, which offer a slightly higher return, around 14% to 14.5%. Finally, there are small cap 250 companies, which can offer returns of up to 18%. Now, you might say, what's there to think about? It's clear that small cap gives the highest return, so let's invest all the money there directly. But don't make that mistake, because the order you are looking at, where returns keep increasing, is exactly how the risk levels also increase. While there is no risk in an FD, small cap companies carry the highest risk. So, let's plan 3 investment option plans for you, and you will see for yourself which of these 3 options is the best and can give you good returns. First comes the safe option, the FD. Now, as I told you, you get up to a 6% return on an FD, but one problem with an FD is that the return it offers cannot beat market inflation. Inflation usually stays between 5% and 7%. And what is the interest rate? Around 6%. If we invest 20% of a 15,000 salary, meaning 3,000 rupees through an FD, how much return will we get? Now guys, I am assuming here that over time your salary will grow, which means your investment will also grow. So let's assume that every year you increase your investment by 10%. Now we need to see what the real value of our money will be at that time after adjusting for inflation. In this chart, we are listing different asset classes. So in the first option, you are putting 100% of your money only into an FD. As you can see, after 10 years with a 10% annual increment, you will have invested 5,73,000 rupees. At a 6% interest rate, the value of your investment will be 7,53,000 rupees. But its original value, meaning after adjusting for inflation, will be around 4.5 lakh rupees. Here, I have taken inflation at 5. Now, after 20 years, your same investment amount will be 61,000 rupees, and its value will be 31,000 rupees. But its actual price will be 94,000 rupees. So, you can see that due to inflation, the value of your money is actually decreasing, and the return you are getting cannot beat it. No problem. Let's look at the data after 25 years. After 25 years, your investment will have reached around 62 lakh rupees. And you can see that after adjusting for inflation, the value of that 62 lakh rupees will be reduced to one-third, meaning around 17 to 18 lakh rupees. Finally, after 30 years, you can see that you will have invested a total of around 59 lakh rupees. And its value will become 1 crore 11 lakh rupees. But the actual value will be 23 to 24 lakh rupees. And even after 35 years, you can see that after adjusting for inflation, you will only be able to make 32 to 33 lakh rupees. Look, investing in an FD is a safe option because you aren't affected by market ups and downs. But a golden rule of investment is lower the risk, lower the return. And a person earning 15,000 would never want to get almost nothing after investing so much. Therefore, let's move on to the second option, the medium risk option. Since the FD couldn't beat our inflation, let's move to the next option, which is the stock market. Now, I won't tell you to invest directly in stocks because investing in individual stocks requires a lot of time, research, and capital, which isn't possible for a normal working person. Instead, you can invest in funds. And even in funds, we have the option of the Nifty 50 Index Fund, which includes the top 50 companies in the country. And on average, you get a 13.5% return here. Then come the next 100 mid-cap companies, which are growing with a stable trajectory. Since these are growing companies, you can expect a 14 to 15% return here. And finally, there are 250 small-cap companies, which are in their extreme growth phase. Since these companies are new, the growth opportunities are higher, and you can see the highest returns here, up to 18%. Now, if we talk about the medium risk option, I would never want to put all my money into small-cap companies. Instead, I will invest in these 3 types of funds using a strategy. You can see that you can invest your 3,000 rupees in these 3 types of funds in a 70-20-10 ratio, where you put 2,100 into Nifty 50, 600 into midcap, and 300 into small cap. Now what this did is that your average return became 14%. So let's see how much your future value becomes with this rate of return along with inflation. So, in 10 years, you can see that your investment has become 11,31,000 rupees. And after adjusting for inflation, you will get 6,77,000 rupees. After 20 years, you will have invested a total of 20,62,000 rupees. And with a 14% return, the future value will be around 75 lakh rupees. And its real value after inflation will be 27 lakh rupees. If you follow this same pattern for 25 years, for an investment of just 35 lakhs, you will get 1 crore 70 lakh rupees. Look, in the FD you got 1 crore after 30 years, but here, in just 25 years, you built a wealth of 1 crore 70 lakh rupees. If you continue this for 30 years, your investment will reach 3 crore 82 lakhs, where your actual amount will be 82 lakh rupees. And after adjusting for inflation, finally, after 35 years, when you have invested 97 lakh rupees, your future value will be 8 crore 25 lakh rupees. And the actual amount you receive, even after deducting inflation, will be 1 crore 30 lakh rupees. Now, you must have noticed one thing in both of these options. When we were investing in the FD, the actual price we received was much less than our investment amount. Meaning, we invested 60 lakh rupees over 30 years, and the actual amount we got was 24 lakh rupees. But in option 2, meaning the medium risk option, we got more than our investment amount every time. 27 lakhs for 20, 47 lakhs for 37, and 80 lakhs for 60. This is because the FD option was unable to beat our 5% inflation. Instead, it kept devaluing our wealth. So, those who think that a savings account and an FD are the best and safest investment for us, see what can happen to your money. Anyway, even though we got good returns in the medium risk option, we want these returns to come faster. We don't want to wait 25 years to earn 1 crore. So if you think like that too, here comes the next option. Look, at this point, I am assuming that if you are earning 15,000 rupees, you must be between the ages of 21 and 25. And my belief is that we should try everything in this phase of life and take all kinds of risks. And if you are in this age group and want to make a lot of money quickly, this third option could be for you. In this option as well, we will invest 3,000 rupees. But this time, the rule will be a bit different. In this option, we will use the 10-20-70 rule, where we will put 70% of the money, meaning 2,100 rupees, into small cap, where we get an 18% return. The next 20%, meaning 600 rupees, will go into midcap, and 300 rupees will go into the index fund. Let's see how much return we get from this. Now, you can see that in this option, we are getting an average return of 16.87%. With this, after 10 years, our investment amount will be 5,073,000 rupees, and the future value will be 13 lakh rupees. After adjusting for inflation, the real value will be 7 lakh and 87,000 rupees. Then, after 15 years, you will have invested 11 lakh rupees, which will have a value of 40 lakh rupees. And within 20 years, you will have invested 20 lakh rupees, and your wealth will have become 1 crore and 4 lakh rupees. Meaning, you can see that the FD took 30 to 35 years. The medium risk one took 25 years. But in this method, we touched 1 crore rupees in just 20 years. And if you follow the same pattern for up to 25 years, your 35 lakh investment will have grown to 2 crore and 60 lakh rupees. And despite inflation, you will get 73 lakh rupees. And if you invest for 5 more years, meaning up to 30 years, you will have invested a total of 60 lakh rupees, whose future value will be 6 crore and 40 lakh rupees. And the original amount you receive will be 1 crore and 30 lakh rupees. Meaning, even after facing brutal inflation, you will have 1 crore 30 lakh rupees in hand. And if you look at the calculations for 35 years, your wealth will have become 15 crore 50 lakh rupees. Just imagine, guys, your investment of just 3,000 rupees can give you 15.5 crores. meaning originally speaking, 2.5 crore rupees. So guys, you saw that whether you earn 10,000 rupees, 15,000 rupees, or 50,000 rupees, if you follow a system and use the right method for your investments, you can make 1 crore in just 20 years, even with a salary of 15,000. Now, many of you might say that all of this is useless, that everything looks easy on an Excel sheet, but it's not possible in real life. To that, I would say your thinking is completely wrong. Yes, it could happen in the future that interest rates fluctuate, inflation increases, or the situation doesn't remain the same as our country's situation is today. But compounding is such a tool that once it becomes your friend, no matter what the situation is, it will leave you rich. And all the calculations I have shown you use compounding. Believe it or not, if you invest this way, whether you do an SIP, a lump sum, or anything else, honestly speaking, your salary doesn't matter. But if you invest with a proper process, no one can stop you from becoming rich in the coming years. So guys, I hope you liked this video. What is your salary and how much money do you invest out of it? Do let us know in the comments. If you liked the video, please hit like and share it with as many people as possible. See you in the next video.